So how should investors put their money to work? Well, that's a good question. Joining us live from Miami Beach at the Future Proof Conference is Bryon Lake, the Chief Transformation Officer at Goldman Sachs Asset Management. Bryon, great to have you here today. What are your thoughts on the market?
Yeah, no, that's exactly the question that we're getting here. We're talking to hundreds of financial advisors that are asking that exact question. How can we incorporate the tools that firms like Goldman Sachs Asset Management offer and help their clients get better outcomes? One of the major topics has been incorporating private assets into their portfolios, whether that's private credit, private equity, infrastructure, or real estate. These are the different types of tools that can help smooth out that ride when markets do get a little bit volatile.
We're going to talk about that in just a second, actually. But, I mean, when you talk about the markets being volatile, I imagine you still have people in stocks. Do you make any big moves at a time like this?
No, I think, one of the things that we always talk to investors about is you need to expect that these moments will come. And so how you've built your portfolio coming into these moments is really the important part. And so if you've got a game plan, the deal is to stick with the game plan. There may be some opportunities that the market presents us to rebalance a portfolio one way or the other. But at this point in time, we think just staying invested and keeping your eyes on the long-term outcomes is really where people should be focused.
Bryon, you deal with some of the highest net worth people out there, and I'm wondering how the rich are dealing with this stock market downturn in a different way from maybe the rest of us. I mean, they have a little bit of a higher tolerance for stock market pain. Are they looking for other assets to get into? Are they looking for other things to do with their money right now?
Well, one of the things that we're spending a lot of time talking with the kind of ultra high net worth community on is direct indexing and the tools where you can kind of rebalance in moments like this, and it can generate some losses within the portfolio while still giving you exposure to stocks that can actually help you benefit from this. And so some of those losses that you can embed into the portfolio, potentially offsetting some gains later on. We also are doing things in the active ETF space. We've launched some buffer ETFs, which are also designed to help investors kind of get invested and stay invested. The idea is they can protect to the downside when markets do get volatile like this, but still offer upside when hopefully markets do recover.
Are people willing to do indexing when the market's going down? I mean, indexing seems like a great idea when the market's going up, but if it's going down and you're marrying your portfolio to it, doesn't that make people feel just a little queasy?
Yeah, no, and I think that's why we've seen so much growth in active ETFs, actually, where you can take active strategies where you've got portfolio managers that are actively identifying opportunities that the market presents it and then delivering the outcome that investors are looking for. So, for example, we've got an active small cap ETF, ticker GSC, and you're exactly right. The portfolio manager is sitting there looking at these small cap stocks and seeing what are the opportunities that I should identify. I mean, a lot of this market volatility, I think, is driven by potentially some regime change around AI, where, DeepSeek came out and the market's rethinking how they want to price some of the Mag 7 that have been driving our returns for so long. And so what we're seeing is a broadening out of the market and an active manager looking through those opportunities and identifying where they can potentially provide alpha or, of course, provide some protection to the downside is absolutely what we see in these markets right now.